I hope everybody enjoyed their dinner. And it is now my honor to introduce our distinguished guest for this evening, Brian Moynihan. As I mentioned earlier, Brian is CEO and chairman of Bank of America. And this evening, he's going to share his thoughts on the economy, the markets, the global financial landscape, healthcare, and other areas that I think are of interest to all of us, such as the application of new technologies to stay at the forefront of the industry. Like Dana-Farber, the Bank of America serves people. It serves companies of all sizes, institutional investors, and communities where they operate every day. Brian's immense perspective is informed by his participation in the World Economic Forum's International Business Council, the Business Roundtable, the Federal Advisory Council of the Federal Reserve Bank, and the National Museum of African American History and Culture. He's also the co-chair of the American Heart Association CEO Roundtable. And I've been lucky enough to meet Brian over the last 2 years at a number of meetings, such as Davos, the World Economic Forum at Davos, in Napa Valley at a Forbes meeting, and at the Microsoft CEO Summit, and the Aspen Weekend. So we've been in the same place a number of times. And I'm really thrilled that he was willing to join us tonight. After 8 years of restructuring and then growing organically, the Bank of America is logging very solid earnings and being rewarded by its investors, including its biggest shareholder, Warren Buffett, who last year told CNBC's Squawk Box, and I quote, that Bank of America was his favorite bank stop. Bank of America, he said, has done a sensational job under Brian Moynihan. Brian had all kinds of problems when he came in. I mean, they were not of his own doing, but he had a ton of problems, and he had a lot of rocks to turn over, and it cost a lot of money. And he just set out step by step to bring the bank back. He has really done a job. Brian, please join me on stage. Thank you so much for being here. All right. So let me start out by asking about your perspective on the state of the economy today. There's been a lot of volatility recently in the stock market, and it kind of makes it difficult to get a read on the underlying conditions of the economy.
So one thing I'd say is don't confuse the stock market volatility with the economy's actual performance. But so like you, first, thank you for inviting me here. It's a pleasure to be here. And I know that we're between this group and the Patriots game, which is starting in a few minutes. And we will be worn out now. After 3 straight nights, the Red Sox, now back to the Patriots. Like Dana-Farber, which is a great research institution, we spend $700 million on research, not on this valuable scientific research and medical research, but we spend it on understanding companies' economies and things like that. And that group of experts has the economy in the U.S. growing about 2.9% this year, maybe 3%, and next year at 2.7%. In the world, I think 3.9 and say 3.7. And why that's important is 2 things. One is that's up from, in the U.S., say 1.5 to 2.2 to 2.9. If you sort of think about that, the economy is going to slow down, but it's going to be a faster growth rate than it has been for several years. And so this is where the sort of hand-wringing starts. Well, the economy is predicted to slow down, but not as much as say. And likewise, in the world from 3.9 to 3.7. So that's going to cause a lot of discussion as we move through the end of the year. When you look underneath it, the world's economies are fairly straightforward. The U.S. is X size, Europe's about X size, China's about 2/3 of X size, and then you start to fall away pretty quickly. The U.S. consumer economy is about 2/3 of the U.S. economy. And so the question that you have to ask yourself, if you really understand the economy, is what are U.S. consumers doing? And the U.S. consumer is doing what they're good at, spending. So we will see in a given year about 15% of all the spending that U.S. consumers do. And through the end of October almost now, they're spending at 9.5% more debit and credit card purchases, cash out of the ATMs, checks written than last year. So if the U.S. consumer's in good shape, that's meaning the world's economies are going to be in pretty good shape. And the question is what breaks that spending? And that's going to come down to confidence. That comes down to the uncertainty. So the uncertainty is not a factor which is actually in the numbers now. It's a factor which could affect people later, and likewise in Europe, which is about 50% of consumers are spending okay. So watch what the consumer does. And if the consumer backs up, you back up in your day-to-day purchases, then we have to be worried, but right now we don't see it.
So just to follow on a little bit on that, what's your perspective on jobs, business creation and growth in New England, but also around the U.S. and globally? What are areas of special concern to you as we prepare to head into 2019?
Well, there's two. Right now, unemployment in the U.S. is at an all-time low level. The last time U.S. unemployment was this level was in the late 60s. The working population in the U.S. was about 75 million. It's now 150. The people working in manufacturing, say 18 million or so, now 12. So we've been able to absorb, the loss of manufacturing jobs, and we've been able to double the working population. And we've done it with immigration. And so one of the issues we're going to have as a country is if we don't square up our immigration policy with our economic policy, we're going to have a shortage of workers. And that is something that's of concern to business here in the U.S. and around the world, which is how are we going to get people to do these jobs that we have when we're running an unemployment rate in the 3.6, 3.7, 3.8 range type of thing. And so there's not only a skill set issue, there's just a general employment level issue. So watch that as being a problem, and that would translate into wage inflation and be problematic there. But the immigration policies of the last several years, and it's not just the current administration, actually goes back on H-1B visas and things like that, has slowed down the rate of workers coming in. And if you think about the U.S. population of the last 50 years, if we had 75 million more jobs created, those people didn't come from procreation, because the math wouldn't do it. They came from immigration. And
well, you come from a family
I
of
come
nine,
from a family
right?
of 8.
So 8.
I remember my mother.
Sometimes it might
somebody
work.
gave my mother a T-shirt, and this will be relevant for people in the older. It said, "Who needs ZPG?" If you remember those days, but zero population growth. But so we got a problem in terms of, and that's a worldwide problem because as people tighten their borders. So I'd worry about that. Then the other major issue is what's the impact of the technologies on jobs over time? It's a longer term issue, and what are we going to do about it? And the reskilling and things like that are going to be critical. So we worry about that in the business community. Near term, to have people can do the jobs we need, whether you're in construction or research or whatever, or banking, whatever. But you worry about long term because you're seeing this massive impact of technology on work content, human work content, that seems to be relentless. And well, we were able to make up in that context for 50 years, double the population working, et cetera. You're sitting there saying, can we do that again? Can we actually be able to get people jobs as we're eliminating jobs? And that's a tricky question, and so we worry about that a lot.
So what do you think the impact of machine learning, artificial intelligence is going to have? I read an op-ed piece recently by Kai-Fu Lee suggesting that many jobs will now become service jobs, that 50% of jobs will be in the service area.
Right.
What's that going to do to a place like Bank of America or to other
Well, it's higher than that now.
institutions?
I mean, that's the statistic. You went from 75 to 150, and manufacturing went down from 18 to 12. So it's all service jobs. And so as I look at it, I'd say, if you think about the 4 or 5 major technologies, voice recognition, data storage and retrieval, network speed and ability to move data around, machine learning / artificial intelligence, and you think about those as a combination, we have been able to run our company in 2018 on 205,000 people probably on average, and in 2010 it took 280,000 people to run the company. So that difference is the size of Delta Airlines' entire employee base. Okay? And so it's not, so you start to think about that. That's 8 years. And so we as a company worry about how we do that, so we try not to hire people if we don't have to, and let it, what we call attrition, be your friend. And with a turnover rate, you can actually manage it, but that's the human side of it, and we got to protect it. But it's not like we're any smaller. We have more consumer customers, we have more transactions, we have more stuff. The digitization is amazing in terms of what it can do to take the human being content out. And so, in there's just a lot, but you really start to think about it every day. If you take out the phone, you take a picture of your check, that's 25% all the checks deposited Bank of America, 50% go to the ATMs, and the least amount go to the tellers. You couldn't do that in 2011 on the phone. You could have been able to do it in the ATM for a long time, but we changed some of when we started giving receipts back, you started trusting that you were going to get your money, so that took off. When we think people change, we still spit out about $500 million of cash out of our franchise every day to go in those 20s in your pocket that you run around and hand people. So it'll take a while to change, but it's relentless.
So to continue that line, I know the Bank of America is focused on an approach that you've called responsible growth.
Right.
Can you say something more about this approach, just describe why it's important and the impact that it's had or will have on your employees and customers?
Sure. Well,
and specifically its implication in Boston.
In Boston.
But you can speak more generally about it. That's fine.
We, through the work of all the team here and starting with Chad, negotiating some agreements at the beginning, we've actually held our employment in New England relatively flat, which is pretty amazing when you think about how many less people we've had. But if you think about responsible growth, we have to grow, no excuses. That means we're winning with you as a customer, including Dana-Farber and other things. We have to do it on a customer-focused basis. We have to do it with the right risk, and we have to do it on a basis of sustainable. And sustainable basically means be the best place for teammates to work, share our success with our community, which is our ESG work, our philanthropy, and volunteerism and everything we do. And then governance, how we behave and how we govern ourselves. And then we have to drive operational excellence, because we have to be able to, in a big company, you have to be able to create your investment dollar, and the way you do that is by becoming operationally more efficient. And so we spend about $500 million a year to take about $500 million a year in perpetuity out of the platform, so that we can then keep the costs relatively flat as we grow the business. And so responsible growth means you've got to do all that. And that is our expression of short-term, long-term balance. It's our expression of how we share success with communities. It's our expression of a basic, simple concept of how we give our clients the right to ask the question, or asking the question, what do you want the power to do? And they can answer it, and we try to do it for them. And it leads to fabulous things. Since I've been CEO, we've given away for philanthropic, straight philanthropy at almost $2 billion. We've had about 18 million volunteer hours. We've had $40 billion of low and moderate income development stuff. We've had an environmental program, which was $125 billion, which we're $70 billion through, which was originally 25, 50, then 125. And so, these are all things we do to try to drive the company on responsible growth.
Now I'm going to ask you to explain something that many of us may not thoroughly understand. I had a little tutorial on it, but am still far from an expert, and that is blockchain. So, and I'm sure some of you know a lot about it. I'm not among you, but can you briefly, or take your time, explain blockchain and how you think that we could apply this technology to healthcare? For example, how could this technology affect medical records?
Well, far be it for me to talk about what you guys can do with it, but maybe just talk about it generally. Blockchain is a distributed ledger. And so what's a distributed ledger? If you own a house, nobody can take that house from you because there's a registry of deeds. That's a distributed ledger. So we all agree, if you go to the registry of deeds in X county, Norfolk County, Suffolk County, whatever, the people of record own that house. If you have a driver's license, and we want to know everybody's driver's license, go to Registry of Motor Vehicles to see it. If you own a stock certificate, it all goes in a place called DTCC, which then holds all the stock, most of the stuff. So if you think about blockchain, it's just making an electronic platform to enable that to happen, and has particular applicability where it's not very good right now. So there's a company called Everledger, I think it is, that is taking industrial diamonds and ultimately get regular diamonds and imprints them and then keeps a record of them. So if you were to drop the diamond ring on your finger and somebody else tried to sell that, they would know that diamond belonged to Laurie and it had been stolen unless she sold it to somebody and registered a name. And so you start to think about the implications of that in blood diamonds and emeralds and things like that, from the mine all the way to the owner, and then theft and stealing and stuff. And the reason why it works as a technology is there's no record of who owns diamonds. They're used. And so it has high value. So the question, it has high value in trade finance. It has high value, and if you're trying to take pieces of a car, manufacture them in a foreign country, and have them go in a car in Detroit, and all that movement of money and information is very expensive. So that's where it works. The question is what it could do on medical records would be you'd have an easy chance to have real medical records for people that could travel with them and be accessible and things like that. You'd have to start to think about the depth of that medical record and things. And the Affordable Care Act is trying to get you guys to standardized platforms. But I think anything that's not organized well, and traditionally, and you guys have improved it tremendously. Obviously, medical records is one of the tougher spots because of all the different providers and the state geography of providers and all the stuff. It would be, I could see its applicability. Do not confuse any of this with a question about Bitcoin and those things. That's
I was about to ask
question.
you about Bitcoin and what you thought of the future of Bitcoin.
The future is what you've been seeing. You have to sort Bitcoin into three pieces. The blockchain, which is that technology which has promise, which we already have 40-some patents issued, or 4 patents issued, 89 in application, 40 in the public sector, public part of the application process. So think about all that. That's an important technology. It's still a nail looking for a hammer. We have not figured out it's cheaper than what we do today, so it'll be interesting. When you go to a digital currency, that happens all the time. So the consumer business today, 55% of the payments are made by digital means, not including you putting your piece of plastic in the credit card thing. So that's considered physical. So start thinking about all the ways you cash. The question of anonymous currencies are very bad things because they fund bad things. And so if the simple way to think about it is the largest denomination of a dollar bill denomination is what, US? What's the biggest bill you can put in your pocket? 100. When did they do that? Richard Nixon actually did it. Not a lot of people know that. When I was on the panel, I didn't want to say Richard Nixon to the people there because I thought that's good and different. Richard Nixon did it in response to the Costa Nostra and Bobby Kennedy and the prosecution and RICO and all the stuff. Remember the drugs and stuff were coming to the United States in the 60s and 70s. And by making $1 million, $100 is over a yard high. $1 billion of $100 bills weighs 3-4 tons. You can touch it, carries residue, can't move it. The last thing you want to do is move that digitally. You want bad people to have to move big amounts of cash and put it in a banking system, and then we can report on it. So that's Bitcoin on a transactional basis is really a bad idea. On a speculative basis, that's up to you guys. But we won't let you do it at Bank of America, so you can figure out what to do.
It's had a checkered history for sure. So you and I just talked about this while eating dinner, but I'd love you to share your thoughts with the audience in terms of what Bank of America is doing to contribute to your employee health care costs, their overall health, their overall well-being, and I'd love you to kind of share with all of us the most important lessons or best practices that you've discovered that would be relevant for other private sector organizations from your experience.
So we have about 700,000 people we insure, and we're self-insured. The economics of we spend $2.1 billion gross to pay for the cost of coverage in a year. We collect in about $500 million in all the different ways, premium, and about $1.6 billion net. And those of you in other businesses wouldn't have this dynamic because just the nature of the financial services business, but we have a $30 billion a year in compensation we pay our employees of all types of compensation, expense, benefits, et cetera, of which only $2 billion is healthcare and $1.5 billion net. So I can save a lot of money in healthcare. It's not going to change the course of Bank of America when you really get down to it. So why do we do what we do in healthcare? And we do it because we want to be the best place to work, and we want to be competitive advantage to have great healthcare and people to take advantage of it. And we have, what's unique about our companies, we have a lot of very highly paid people, but we also have a lot of people who are paid under $100,000. So we started playing around when I became CEO, and it really came out of the Affordable Care Act. I was sitting in a conference room, and remember one of the first pieces of the Affordable Care Act, you can't pay more than 10% of your compensation for health care premiums. It was one of the rules that was going to come out. I said, that can't be true at Bank of America. Nobody can have to pay that much. And we could. So we immediately dropped it below that level for everybody, for the lower paid people in the company. So they were paying $500 a month. We dropped it to $250. Then we said, well, how are we going to really drive down our costs over time is to get people healthier. So the next step we did is to give people $500 if they got the bio screening each year, and $500 for their spouse partner. That gave them another $1,000 off, and so for a year. So basically, you got family coverage, which costs about $1,000 for the people who get paid higher. They get for about $150, and we have not raised it since 2010. So trend's 9% actually in the industry. We have a trend of about 6 or 7. And we have not given a healthcare cost increase for anybody under $50,000 in our company since 2010. So if you took 5% per year for 5 or 6 years, think about the benefit that's giving them. For a person who's making, let's just say making 50, the healthcare cost for a family is 24, and then you didn't cap it. Not only have they gotten salaries and wages increase in our company of 6% per year, just basic pay. On top of that, they've avoided 6-7% on half their pay, if you think about it. And so how do we do it? We started stressing wellness. So we did the biometric screening, and that helps us understand. And we do all these wellness programs. We do mental wellness programs. We do everything. And so the low risk factor employee base has gone up 3% a year, and the high risk factor employee base has come down 3% a year, 2% a year. And it's all about obesity and all the different derivatives of the hypertension. And it's been pretty neat to watch it play out. So we have 80,000 people counting their steps for 5-6 years in a row around the world, and we circled the world I don't know how many times to Mars and back, and 82 whales have come off the bodies of the people, and all these great statistics. But the reality of what we're really trying to drive is this feeling that we have a very strong plan, capabilities, but we'll give them to you. We'll give them to you at less cost if you help us drive down the cost, and we will never use a stick. So our people on co-pay type plans, the higher end is on a high deductible plan. We wouldn't do that because we want to have to come out of pocket. For that, our benefits satisfaction, our employee base has gone from 60 to 85%. That turnover goes down, and it all works for you. And so, but you got to be coaxing to get better the whole time too if you're not going to raise the costs. And so we've gotten our trend down to about 5 to 6%. So even back when I was at 9 in the industry, we're at 5 or 6 because the big population of people is getting a little bit healthier every year. And we're still not sure, honestly, whether they're getting healthier because we do same store, what we call the same person a year earlier, but we also think the atmosphere we create in a company tends to attract people who are healthier.
So last question I'm going to ask you is a little bit personal. So Warren Buffett said you turned it around in 8 years. How'd you do it?
I had a great group of people, and you had to sort of divide the team into different parts. All during that time, our social scores went up, our client scores went up. We brought out tremendous new product capabilities, et cetera. So the first thing I'm going to do is have people kept focused on running the company and driving the business. The second thing, we had to have people focused on cleaning up the mess. And so we had a huge responsibility because all the enterprise we bought in a mortgage to go through all the modifications and everything you've read about. And the third thing we had to do was to sort of reset the company on purpose. And the historical positioning of our company, if we talked about, our purpose was to be the most admired company in the world, and there's nothing wrong with that because it was as defined by your customers, your teammates, and your shareholders. What's wrong with that? Nothing. But who's it about? Us. So our purpose is to help you live your financial lives through the power of every connection. So we flipped the company, so we said, it's about the customers. It's about the customers, it's about the customers. So we kept people focused out. And then, then the team did all the hard work, and I just watched, and it worked. And, we did some incredible things. I mean, and all during the time, we knew we had the earnings were there. It's just that you had different people asking for them for litigation settlements and things like that. But it's really down to that basic things. Keep the core company running, get a team to triage the heck out of all the issues, and the rules changed dramatically over the last 8 years in terms of more capital, more liquidity, rules that people never thought of all came out. And then you had to you basically had to have the team answer a simple question. If we're not here tomorrow, as Jim Collins would say, who's going to miss us? So why do we come to work? Who do we? And he got them focused on that, and that then played back into the first thing, and it worked. And there is a lot of incremental stories about this thing or that thing, but mostly it was those three basic principles. And by the way, now the question is we're a $300 billion market, $270 billion, $80 billion market cap company. We're second largest financial service in the world. We're the 12th largest overall of all companies in the world. We earn $7 billion after tax. And so the real question is, how do you keep people focused? And so what we tell ourselves, it was a nice start. We're 240 years old.
That's not a bad problem to have.
Yeah, and so you got to sit there and say, where are you going to go next? Because nobody's going to care what we did yesterday. It's going to care what tomorrow. And that's hard to get people, after doing this, to sit there and say, you know what, we're going to do it all again. 80,000 people is not fun. Then you start to say, and we got to keep doing it, because if we don't, somebody else is going to do it to us.
Thank you, Brian. I'm sorry to say that I'm getting the sign that we need to let people get home, watch the Patriots game, get a good night's sleep, because we're going to start early tomorrow morning. And thanks again to Brian and to all of you.